there's decent inflation numbers both days. Really hasn't made a difference. We really have a dollar rout happening right now. And, I want to talk about what you do in a rout. I'm never there for 100% of the moves. In fact, there are, many times that I don't, maybe I catch half of it, and I can be happy with that. So what I'm saying today is, we've been bearish a dollar from 109 when tariffs were announced, even before that, and then we had that big retest on the tariff announcements, where one, you know, Monday morning you came in and the Dixie was up 200. So we've been working the short side of the dollar for quite some time now. It's been a matter of months. We're now taking out some psychological support at the 100 level. Euro has gotten to my targets, not final targets. I still think there's 118, 120. But I think that at this point, that you use this type of panic to book things. So I talked about taking partials in the dollar on, that was yesterday. Okay. So here we have the dollar right now. And the last short was, gosh, in this week, what a week, too. I mean, when you have this normally, this action would happen in a month. So we gapped down today, but our sell was at 103. Then we had that little bounce. So this was a big trade, but historically, if you go back on all the videos, you'll see that we were, you know, or remember, or how about this? Most likely participated. So we've been in a pretty good bear move in the dollar for quite some time from up here. So, it's doing nothing right on a daily basis, but now I think we're getting into where you could start to look for maybe a turn next week. The long-term target was 96, 95. We're about 300 handles away from it. This could be a breakaway gap. So your first, I'm flat the dollar. Okay, I'm flat now. All right, I'm not, I know that we could still crash and maybe we're going to go to 98, 97. But I think that it's getting very one-sided here, and I'm not buying it. Okay, I'm not buying the dollar yet. I might, but I'm just talking about taking profits. This was a very nice ride, as was the US dollar yen that we got on the short side a few times up here at 58. We did it here, took profits here, and then put some more sells out at 148. So I was talking about 140 in the end as a major neckline. We're almost there. This is going to be really significant support if we just break right through here, because you're talking about over a 2,000 pip formation that could take it to 120. But I still think there's a chance that if the market stabilizes, and now I want to go to the market, the S&Ps, which are down. But look at this weekly candle. Okay, so we went to 48.16. So after that big day of the delay of tariffs, um, you I said, well, what do you do? You probably don't know what to do. So you start trading retracements to buy, because I think that the market, there were more tariffs announced, that the market can handle it better than the dollar. And a weak dollar should be supportive. At least it's not a headwind right now, although people are saying it's repatriation. But you know what? You look at European markets, and they certainly didn't fare much better. We talked about the divergences in the DAX. So, the story of they were outperforming, but you look at things like, emerging markets, it's a pretty good hit. 45 to 38, that's over, it's close to 20%, right? And then, you probably want to, everyone likes to look at the DAX, and that wasn't much better. That was at least 20% on the DAX, right? From 23, that's, yeah, 23, 4, yeah, a little over 20%. So this isn't about flows going into foreign bourses either with the dollar weakness. So it's my contention that eventually probably helps stocks. And I'm starting to think that we have a 1987 kind of setup. I started talking about this yesterday. And what was happening in 87 was you had a declining dollar pretty sharply. Back then, it wasn't the euro, it was the Deutschmark and still the Swiss, leading the way. And you had a bond market under pressure. Now, this is before the Plaza Accord. And you had stocks going up. Okay. And this happened for quite some time where yields kept going up, dollar kept going down, but the market kept fighting it and rallying. So here's my contention. We still need closes back over 5,500 to confirm this as a low. But until we take out 4,800, I'd be looking to buy retracements and buy things that are not affected by tariffs. Um, things like Uber and Tesla's help by it, I believe in some way. But there are a lot of U.S. manufacturers. Maybe look at the Russell. But I think that this market could climb this wall of worry into the summer, with the dollar continuing to be on the weak side and the bonds continuing to be on the weak side. TLT really has to hold 85. Maybe it tries to hold here and we get, a C wave, but just like 4,800 is very important in the S&Ps, that if we took out 4,800 in the S&Ps, we're going to 35. If we take out 85 on a weekly basis in TLT, take a look at this weekly, and it spells that we could have some type of gilt moment like they had in the UK. Look at that weekly chart. So if you just look at this as a head and shoulders, call this a left shoulder head, right shoulder neckline 85, and you do the math, that's 14. That's going to take you to 71. And if I, extend my line out, look at that. That's where it's going to come in, right around 70. So that's a big move in bonds if that's going to happen. I can't see it being good for anything in the economy, but to me, you look at the weekly candles here. Here are bonds, and this was the weakest flight to quality rally I could remember in my career, and I've been doing this for 4 years, 4 or 5 years. Okay, and um, it's just there's a problem, Houston. Okay, look at this weekly candle compared to this weekly candle. Blue, right? Red. Which one would you rather be long? Maybe you'd want to be short both of them. But that's the example. Okay, tomorrow's the negotiations with Iran over the nuclear program. You guys know I've been buying WTI calls and did it when it was pretty cheap near USO on the WTI was 54-ish. So we've come up about $5. We still don't have a weekly reversal. We're going to have what they call a negotiation tomorrow with Iran that I think is going to go something like this. You destroy your nuclear program, or we will. So with everything that's happening in the economy, um, it could be uh, done for a distraction, but we know it's done because there's a regime that said they're going to use their nukes before they even owned them. I don't know. I've read different things. I just think that they have their armada there, and this is Netanyahu has been on this mission forever, and Trump's backing him. So I think it's going to happen. We'll see what happens with crude. I mean, at least I wouldn't call this great follow through of a major breakdown. We got about $5 out of it, but we're already $6 above this low. So that's my geo play, and I went out to July, although I believe it will happen much earlier. Let's see. So I think that's about all to cover. Take profits on your bearish dollar positions. Let's see what happens. I know some people that think that this is a bull market. In fact, maybe I could find what one of my guests shared this week. Maybe it'll show up on a monthly. Let's look at this. Mm, Showed this as a breakout. We're pulling back here. So I mean, this could be ABC right here. Maybe we stretch to 96, 95, but I just think there's too much company on this side of the boat, and it was great being a bear here, right? And we traded the bull side last October. So for the most part, we were on the right side of this rally from the fall, and then we got short the dollar right and rode different currencies up while the dollar and we were shorting dollars. So that's my play of the quarter, and we'll see what happens. Have a great weekend, and remember, don't just count your pips, count your blessings. Do your work over the weekend, and we'll see what they're. Oh yeah, I have a mea culpa. Hold on, I was wrong. If you didn't hear me, I was wrong, and I'm wrong a lot. Okay, so I thought we were going to have a failing rally in gold, and here's gold. It's almost confirming on the daily. There's no divergence. And silver's even trying to kick in, but I still look at this silver chart and I don't believe this is the low. Okay. And why? So maybe we get a correction in gold and we get one more wave to the downside in silver. That would probably happen if we had a dollar rally, right? So still think there's another wave back down to get to these weekly lines that I have. Gold, I don't know what to do. I mean, look, I own Newmont puts, and I think I'm getting hammered on that. Yeah, look, it's going parabolic. GDX, same thing. So there are all the golds. Here's silver. Was this it in silver too? Here's the juniors. Yeah, that was it. So you had to buy. It was almost like COVID. You had to buy the miners on the crash day. So instead, I bought WTI. Okay, we're always learning, and I hope you are. If you are, let me know if this is helping you, what kind of week you're having. I did want to touch on Bitcoin because that also is a sign of liquidity. Okay, held up pretty good during the crash in the market, showed some pretty good relative strength. And look at where we're at on a 4 hour, right against this 200 moving average. We start clearing this, it's going to look very constructive, and that maybe 72 is off the table, and this was it at 74. Okay, so Bitcoin looking pretty good to me. And that's a wrap.